Come on, guys. Let's now solve question number 2 from our September 2025 examination paper. CA Intermediate Advanced Accounting. This question is on preparation of financial statements of a company. Read the question. The following balances are extracted from the books of Chia Limited. Okay. What have they given? Trial balance, debit, credit, bifurcation. They haven't given. They've given it together. At the end, if you observe, they have too many adjustments, but it's all easy. Don't worry. They've asked you to prepare only balance sheet of Chia. They have not asked you to do statement of profit or loss, but only balance sheet. Same question if it comes in your class material, no, it will be much lesser in size. Here it looks lengthy because number of items printed in a page is less and the size of the page is also less and the spacing between lines is more. So it makes you feel that it's a lengthy question, which is actually not. It's a psychological game that you have to win in your mind before you write the answer right. Adjustment number 1. Authorized capital 50,000 shares of rupees 100 each. They have to disclose it only. No adjustment. 5,000 fully paid up equity shares were allotted for consideration other than cash. Disclosure. No adjustment. We'll put 2 stars next to share capital. Do you see share capital anywhere? Share capital illegally. There are 2 adjustments. 1. Authorized capital. 2. We'd have to disclose the consideration being non-cash for certain shares issued. See the third adjustment. Debentures of Glad Limited are acquired by the company with an intention of holding them for more than 2. So we have purchased debentures of another company, which is our investments. They've told the intention to hold it is for more than 2. Basically, they're telling us write the heading as non-current investments, not as current investments. Till now, we used to make our own assumption. Now they've told this is non-current investment, 6 lakhs. Got it? What's after that? Then we have cost of plant and machinery. How much is cost of plant and machinery? 41 lakh. We need to open notes to accounts for tangible assets. Original cost 41 lakh. And here in trial balance, whatever you have will be post depreciation. Right here, if you want, this is WDV. And in this question, we are not preparing statement of profit or loss. So this is after depreciation. This is after original cost given in adjustment. This is WDV. I'll find accumulated depreciation only for the purpose of disclosure. Only for the purpose of what's after this plant and machinery that we have. Next, what I have is that's the one, no? Cost over. Then balance in SSA Finance Corporation includes 45,000 interest accrued but not due. This interest accrued but not due. It's not current maturities of long-term borrowing. This is other current liability. 45,000 is interest outstanding. They've incorrectly included it in loan. Loan will be long-term borrowing. In that 45,000, I'll show it as other current liability. We cannot include interest in loan amount. Am I right? Next thing is it is hypothecated against plant and machinery. We have to disclose it separately. And usually when they give loan like this, they had an option, no, long-term or short-term. Where they've clearly told repayable in June 2028. That's after 2 years. So it is long-term. Come to that loan from SSA. Where do we have it? Somewhere here. Oh, they've given all credit items in one place and then debit items in one place. They've given bifurcation. This loan, whatever is there, 10 lakhs. In that, first I will deduct my interest outstanding. Write it as other current liability. Next, I'll say that this loan is against hypothecation of plant and machinery. Disclose that also separately. Am I right? And this is long-term borrowing. Cannot assume it to be short-term borrowing. What's after this loan? Next adjustment is short-term borrowings. They've told some of it is secured, some of it is unsecured. Some of it is from bank, some of it is from related parties. What should I do? Disclose. Come on here. Do you find short-term borrowings in the credit items? You would have to disclose how much is it from bank, how much is it from related parties, how much is secured, how much is unsecured. Only disclosure. Then next adjustment after that is trade receivables. 5,26,000 due for more than 6 months. We have to disclose no trade receivables, aging schedule. How much is it for more than 6? How much is it for less than 6? Actually, the aging schedule is less than 6, 6 months to 1 year, 1 year to 2 year, 2 to 3, more than 3. But like I mentioned, always the question they'll ask only less than 6, more than 6. Some year, by mistake, if they give you 1 to 2, 2 to 3 and everything, you have to show it separately. If you only show less than 6, more than 6, then gone. What do we have after that? Bills receivable for rupees 58,000, maturity 6th May, year ending 31st March, maturing after that. Contingent liability. Bills discounted but not yet matured. Disclosure at the end of balance sheet. Contingent liability. Company on the advice of independent valuer revalued freehold land at 40 lakh 50. Freehold land right now is at 30 lakh 88,000. We're increasing its value. To the extent it increases, it will appear as revaluation reserve in our reserves and surplus. In the balance sheet, I show freehold land at a revised balance. Understood? What do we have after that freehold land? Inventory of finished goods, including loose tools. Loose tools is also included in inventory. 1 lakh 2, which do not meet PPE definition. It is not an asset which is non-current. So it is current asset inventory. I hope you remember. Consumables, loose tools and spares will be considered as inventory if it doesn't fulfill the definition of PPE. Done. 1 lakh 2. Sir, what to do? You cannot write inventory lump sum amount. You need to show how much is loose tools, how much is other inventory. Separation has to be shown. In fact, inventory has to be shown as raw material, work in progress, finished goods, consumables, loose tools, spares and stores. Everything should be shown separate. But we don't have so much information. Total inventory is 4,67,000. In that, I'll show loose tools, others. Loose tools so much, others so much. I'll just show that split. Understood? Very good. What's after that? After that, claims against the company amounting to 4 lakh 15 have not been acknowledged as test. Someone else is telling us that we should pay them 4 lakh 15. I am telling you, no, 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 I don't agree. So they have claimed the money. I have not agreed. So they will go to the court and sue me. If proved, I might have to pay. So there is an obligation on me to pay, but it's not present. It is possible obligation. And that possible obligation is decided upon happening or non-happening or occurrence or non-occurrence of one or more future events which are uncertain and uncontrollable. Basically, this is a contingent liability requiring separate disclosure after balance sheet. I am assuming that the possibility is not remote, so I'll disclose as contingent liability. If it becoming my debt is very remote possibility, I won't even disclose as contingent liability. I hope you remember reading it in ACE 29. Then balances with bank include 24,000 with Vihar Bank, which is not a scheduled bank. What do I do? In my bank balance, I have to disclose how much is it with scheduled bank, how much is it with non-scheduled bank. Just a split. 7 lakh 70 I will show as 24 and others. 24 unscheduled bank balance you can just write others. You don't even have to write scheduled banks. Understood? All adjustments I've read and made the mark. Looks lengthy in the paper, but very much doable. 14 marks a lottery. Let's start from the beginning and then start preparing our answer now. Can I? We marked all the adjustments. Where do I write this 40,000 equity shares of rupees 100 each? 40 lakh. Share capital. I will open one notes to accounts for share capital. I hope you remember the order. First page, balance sheet. In this one, they have not asked P&L statement. So, first page, balance sheet. Second page and third page will be notes to accounts for balance sheet. Third page and fourth page and fifth page will be liability side notes to accounts. Understood? Sorry, asset side notes to accounts. First page balance sheet, second and third liability side notes to accounts, fourth and fifth asset side notes to accounts. If in case PL was there, second page would be P&L statement and 3, 4, 5, 6 pages will get pushed. And in the last page, we will prepare income side of P&L notes to accounts in one page, expense side of P&L notes to accounts on the other. Done. Spacing for you to just know. Authorized capital will write later. For now, 40,000 shares of rupees 100 each, 40 lakh. That's what is given here. Money received against share warrants. This is a very new item. We have it in our schedule 3 format. In the questions that you would have usually done, you would have not seen this item anywhere in the answer. But here they've given. No adjustment. If you remember the format, balance sheet, non-current liability, liability side, asset side. Liability side, SSNC, shareholders funds. Under shareholders funds, we'll write share capital, reserves and surplus. Third item is money received against share warrants. I hope you made that chart, stuck it to your wall and then reading it. Nice. I will write in my balance sheet straight away. Money received against share warrants 2 lakh 70,000. Done. Next, general reserve 6 lakh 90. There is no adjustment. Anyways, I'll open one notes to accounts. Right. General reserve 6 lakh 90 in the outer column only. Actually, there is no much adjustments to this. Then what do I have? Capital reserve. How much is capital reserve? 12 lakh 50. In the 20,000 is revaluation reserve. I have to show the disclosure so that what do you say? There would not be any problem. Because later someday, if the company is doing bonus issue, they can use capital reserve only if it is realized in cash. Can you use revaluation reserve for bonus issue? So that we would have to make disclosure. 12 lakh 50 is capital reserve, but includes 20,000 revaluation. Can I say 12 lakh 30,000 is capital reserve? Revaluation reserve is 20. Why am I not writing in outer column? Because one of the asset, freehold land, will be revalued. Then revaluation reserve will get created. I will add it to this and then write it to outer column. What's after revaluation reserve? P&L. A current year PL is already prepared. This is including current year profit 3 lakh 50. I would write P&L outer column only 3 lakh 50. Beauty of this 14 marker in September 25 exam. They have not asked you to do PL. They've asked only balance sheet. They've put lot of disclosure requirements, which is still okay. Next, we have security premium. This is also reserve. 75,000. They've given 0.75 lakh. I'll write 75,000. Got it? Then deferred tax liability. They've already computed and then they've given it 56,000. Write it straight in the balance sheet. It is a non-current liability. I hope you remember. 56,000 as it is. No need of notes to accounts. Then I have with me 10% debentures. Secured long-term borrowings 5 lakh. There is no adjustment. I'll write it in balance sheet straight. Long-term borrowings. I would write once again. There are a lot of other long-term borrowings. There is that loan from one bank. Yeah, that interest accrued but not paid and all adjustment. So I'll write it in notes to accounts only. Yeah. I would write here secured. I would write 10% debenture. How much? 5 lakh. I'll add that other loans also and then write it. What do we have after this? Loan from SSA Finance Corporation. Long term borrowing. How much? 10 lakh. I would write here, but I would write it in inner column. Why? 10 lakh is not the loan. Including interest, it is 10 lakh. Long term borrowing should not be 10 lakh. Interest is a liability, but interest and loan both are not same. Interest should be other current liability. Loan should be long term borrowing. Understood? We'll adjust it when we read the adjustment. There are other long term loans, but these are unsecured. These are secured. I would write unsecured loans separately. Other long term loans 4 lakh 25,000. Then what's next? What I have with me after that is short term borrowings. There is adjustment 6 lakh 95. Some part of it is taken from related party, some part of it is from bank. So I would write 6 lakh 95,000 is actually the total. Is there some adjustment? Some adjustment is there, yeah. I don't know right now. So we'll keep it pending. We'll write it later. Some part of it is taken from bank, some part from related party, some adjustments are there. We'll write it later. Is that okay? Very good. Come to the next item. What is it after short-term borrowings? Trade payables. Yeah. Trade payables 5 lakh 16. Straight away balance sheet. Come to balance sheet. On the liabilities side, I would write trade payables 5 lakh 69,000. Done. Next, other current liabilities 1 lakh 41,000. Balance sheet, other current liabilities, but I won't write. You know why? That interest will come, no? So I'll open one notes to accounts. In notes to accounts, other current liabilities, I'll write other current liabilities. Other current liabilities is 1 lakh 41. Other than other current liabilities, there are some other current liabilities in other current liabilities. You're asking for tongue twister in English. I've given it to you in accounts. In other current liabilities, other than this other current liabilities, there are some other current liabilities. Not able to follow, sir. It's okay. You understood, no? Following bit bidding. Short-term provisions 1 lakh 36. That short-term provisions I would write as the short-term provisions that we have. How much? 1 lakh 36,000. And there should be something more also to it, I guess. No. Balance sheet straight. Ka? 1 lakh 36. Say something. Very good. If you want, we can write here also. 1,36,000. What is this? Sir, sorry, already format is there, so I just added one. I hope you won't be upset. Then what's next? We'll go to debit aspects now. Freehold property, 30 lakh 88,000. This will change. There is some upward revaluation. I'll rate 30 lakh 88,000 as the original cost before revaluation. Then plant and machinery, 26 lakh 80. This is WDV. I've written it also there so that you won't forget. WDV is 26 lakh 80,000. Original cost is given in adjustment. I'll find accumulated depreciation for the purpose of disclosure. Next, I have with me investment in debentures of Glad Limited. NCI means non-current investments 6 lakh. Balance sheet straight. In balance sheet, I'll write non-current investments 6 lakh. What is this in? This is debentures of Glad Limited. Understood? Then capital work in progress. Where do I write this? Remember tangible assets. We write PPE, tangible asset, intangible asset, capital WIP, intangible asset under construction. This is capital WIP, 11 lakh 40,000. I'll write capital WIP 11 lakh 40. No need of notes to accounts. Direct. What's after that? Trade receivables. How much? 11 lakh 57,000. In my balance sheet on the asset side, trade receivables 11 lakh 57. No adjustment. Outstanding more than 6, less than 6. Is it there? Oh, sorry. We'll write one notes to accounts in that case. On trade receivables, 11 lakh 57 is the total. We'll later split it. Then we have inventories, finished goods, 4 lakh 67,000. And Geeta, meaning goods in transit, 1 lakh 35. Some goods are inside our godown, some goods are on the way. On the way means it will be almost received. Both are my inventory only. But goods in transit should be disclosed separately. Why? In the balance sheet, that 1,35,000 inventory will be there. In godown, it will be not there. Why? It's still on the way. So we have to disclose separately how much stock is in hand, how much stock is in transit. I'll show here. Finished goods. How much is it? 4 lakh 67. And here I would have to show that loose tools separately. Don't forget. So I will say Geeta. Geeta is how much? 1 lakh 35. Once again. Finished goods. I would have to show that part separately. Geeta is 4 lakh 67. No. Geeta is 1 lakh 35. Sorry. Geeta is 1 lakh 35. Finished goods is 4 lakh 67. And I would have to deduct it and then show that loose tools separately. Do you agree with what I'm trying to tell? So basically, I will not write 4 lakh 67. I will not write 4 lakh 67. So I would write 4 lakh 67,000 in the inner column. And I will deduct that loose tools. And I'll write loose tools separately. Basically, that's the total amount. I'll show the split. Then calls in arrears. What to do calls in arrears? To be deducted from the paid up capital. To find the paid up capital from the called up capital. How much is in arrears? 64,000. Come to share capital notes. 40 lakh in is in inner column. Less calls in arrears 64,000. Making it 39 lakh 36,000. Then next item, cash in hand. Balance with banks. I'll write both of them in cash and cash equivalent. Balance with bank, there is that unscheduled bank balance. Should be shown separately. Cash in hand is 56,000. Cash at bank, we should show unscheduled bank and scheduled bank separately. But together it is how much? 7 lakh 70. We'll split it later. Split it. Understood? By this we're done with trial balance, debit side also. Now finally, shall we go to adjustments? Simple, yeah. Authorized share capital. 50,000 equity shares of rupees 100 each. What do I do? In share capital, I will just disclose it separately. 50,000 of 100, 50 lakh. Will this count somewhere? Only disclosure. Then 5,000 fully paid up shares were issued for consideration other than cash. What to do? Write one statement. Out of the above, 5,000 shares have been issued for a consideration which is other than. Next, debentures more than 2 already taken as non-current. Already taken as adjustment 3 is over. Plant and machinery. Original cost is come to tangible assets. Original cost 41. WDV 2680. What is the difference? What do we get? 14 lakh 20. That is depreciation. Only disclosure. Only disclosure. Just take the total here. Later. After all adjustments, there is this revaluation of freehold land. I don't have to post this 14 lakh 20 to PL. PL is already prepared. They're asking us to only prepare balance sheet. Next, after the fourth adjustment, fifth one, balance in loan from SSA includes 45,000 interest accrued but not due. Okay, come to long term borrowing. 10 lakh is there, no loan from SSA. I will deduct interest accrued 45. Write that as other current liability 45. Easy? The next thing is they're telling the loan is secured against hypothecation of machinery. Right here, loan is secured by hypothecation of plant and machinery. If you want, you can disclose that here also. Hypothecated against loan from PFCL. What is it? SSAFC. SSA Financial Corporation. Got it? Only disclosure. Short-term borrowings include CDC Bank 4 lakh 50 loan, related party 54,000 loan. Should not take loan from relatives. Bank al tagondre parvagilla. Relatives, it's very problematic. Yeah. How much loan from CDC? 4 lakh 50. And related parties 54,000. Sir, but actually total borrowing is how much? 6 lakh 95. Any other adjustment here for that? No. So identify, no, there is some others. Unsecured. This is unsecured. This is this. So there will be some others. How much is 450 plus 54? 5 lakh 4,000. But actually, how much was there in the trial balance? 6 lakh 95. So there is some others. We don't know how much is it others. We can find it. Total was 6 lakh 95,000. Am I right? So I will write here 6 lakh 95,000 minus 5 lakh 4,000. Or I'll write 4 lakh 50,000 minus 54,000. How much do we get? 1 lakh 91. I'll not write this also. Does this help? 6 lakh 95 should go to balance sheet now. Okay. What's after this 6 lakh 95 short term borrowings? Trade receivables 5 lakh 26,000 is due for more than 6 months. What do I do? My trade receivables is here. I will disclose how much is due for more than 6. 5 lakh 26. I will assume that the balance is due for less than 6. Or you can just write others. How much is it? It is 11 lakh 57 minus 5 lakh 26. Totals are same. Just have to show the split within that column. Then this is disclosure. Bills receivable of 58,000. Bills discounted but not yet matured. What do I do? After my balance sheet, I would write one point. What do I write here? Same thing. Whatever is there. Bills discounted, not yet matured, 58,000. You can write full sentence. I've written it short. Understood? Yes, sir. Sir, can I write it after notes to accounts? Pariri. Company on the advice of an independent valuer revalued the freehold property to 40 lakh 50. Come to notes to accounts of tangible assets. This becomes 40 lakh 50. How does 30 lakh 88,000 become 40 lakh 50? Do 40 lakh 50 minus 30 lakh 88. 9 lakh 62,000 is upward revaluation. In revaluation reserve, I would write 9 lakh 62 add. Total revaluation reserve will become 9 lakh 82,000. Done. After that ninth adjustment. Now I'm going to 10th one. Inventory includes 1 lakh 2,000 loose tools. All I would have to do is disclose it separately. Total inventory is 4,67,000. From that, I would deduct loose tools of 1,02,000. What do I get? 467 minus 102. I'll get 3,65,000 and I would write loose tools 1,02,000 separately. If you think this presentation is not nice, you can choose to write 4,67,000 here and then deduct this here, write less loose tools minus 1,02,000 and delete that part and write sum here to make it look nice presentation. And loose tools will show separately 1 lakh. Is this okay with all of you? Presentation only, yeah. Then claims against the company not acknowledged as debt. One more item requiring separate disclosure as contingent liability, 4 lakh 15. I've already disclosed one contingent liability. I'll disclose one more. Claims against the company not acknowledged as debt, 4 lakh 15,000. Got it? Say something. Yes. What's after this? Balances with bank, 24,000 is with Vihar Bank, which is not a. Come on here. In my bank balances, 7 lakh 70 with scheduled bank, I don't know. With unscheduled bank, it is 24. To 7 lakh 70 minus 24. 7 lakh. That's it. Only disclosure is to be done, and we have done that. They've given 12 adjustments for disclosure. All done. That's it. We've come to the end of the problem. Now, all that we need to do is take the totals and post it to balance sheet. We are not even doing PL for that to be weighted. Everything's done. Just the total of the notes to balance sheet. Help me. 39 lakh 36,000 from here will go to balance sheet as note number 1, share capital. Note number 2, reserves and surplus. How much is it? 33 lakh 27,000. 33 lakh 27,000 I'll write here as note number 2. Already money received against share warrants is written. Long term borrowings is the next note. I'll take long term borrowings. Come to long term borrowings. How much is it? 5 lakh. One second. I would have to write this 10 lakh minus 45 here. 9 lakh 55. Now take the total. 18 lakh 80. I would write 18 lakh 80 note number 3. Then deferred tax liability return. Short term borrowings. Shall I write short term borrowings? How much do we have short term borrowings here? 6 lakh 95. 1 lakh? 6 lakh? ಯಾವುದಪ್ಪ ಬೇರೆ ಏನೇನೋ ಹೇಳ್ಬಿಡ್ತಾರೆ ಶಾರ್ಟ್ ಟರ್ಮ್ ಬಾರೋಯಿಂಗ್ಸ್ ಶಾರ್ಟ್ ಟರ್ಮ್ ಪ್ರಾವಿಷನ್ಸ್ 1 lakh 36. Careful. Yes, short term borrowing 6 lakh 95. I would write short term borrowing 6 lakh 95. Then I have with us, once again, this I would select this total. Suddenly, if in case we change something someday, it should not get affected. Okay. Sorry, yeah, correctly put 6 lakh 95. Then other current liability, that interest is there and some other current liability is also there. Note number 5. How much? 1 lakh 86. I would write 1 lakh 86. I'll also write 1 lakh 36 short term provision. That's already written. 1 lakh 86. Let's then write tangible asset. Can I write tangible asset? How much? Yeah, tangible asset. You take the total 40 lakh 50 plus 26 lakh 80. 67 lakh 30. Akka. Inventory also I'll post together. Inventory is how much? 3 lakh 65 plus 1 lakh 35 plus 1 lakh 2. So 67 lakh 30 is tangible assets. 6 lakh 2 is inventory. I'll write it to balance sheet. Tangible assets 67 lakh 30. Inventory 6 lakh 2. Last item, cash and cash equivalent. Trade receivables done already. This should be note number 9. See, 10th note. How much is cash and cash equivalent? 8 lakh 26,000. I'll post 8 lakh 26,000. Ta-da! Now, all you need to do is pray to Almighty and then take the total on the liability side. 1 crore, 10 lakh, 55. Everybody got this? Check the total on the asset side. Check, 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 check. Yes. Tally. Very good. I hope you understood. This is the solution to question number 2 from September 2025 CA Intermediate Advanced Accounting paper.